If you would ask the professional traders out there, which tool do they prefer the most for continuation entries? Most of them would say Fibonacci retracement. Fibonacci retracement is even my personal favorite tool for spotting continuation entries. The level of clarity it gives you is just mind blowing, and I do not think any other tool or indicator is even close to it. Trust me, I'm not bragging about its achievement and what it can do, but this tool is a game changer. You just need to be able to understand what it does and how to use it precisely. And this video is all about it. Hi guys, welcome to Forex Monopoly. My name is Daksh and today we will talk about Fibonacci retracement. So there is a very simple reason for the high win rate we get with Fibonacci retracement. The price always moves in a particular pattern or wave called as impulse and correction. If you're not aware of what impulse and correction are, then I have added a video on it. You can check it out by clicking the I button. Now, just a quick recap of impulse and correction. Whenever the price moves up or down, it doesn't move in a straight line. It moves in a form of highs and lows, and these highs and lows are formed in a certain pattern or waves called as impulse and correction. The price is said to be impulsive when the price moves powerfully in any one direction, and whenever the price moves sideways very slowly, it is called as a correction. So let us assume the market is uptrending and the price is moving up. So it will move something like this. It will first move up with an impulse, then it will correct, then if the price or the trend is strong, the price will again move up in the same direction and the price will continue to do the same. Now many of you must be wondering, why am I telling you this and how is it even related to Fibonacci? Well, it is totally related to Fibonacci retracement. Like, imagine if you could actually find out a correction is going to end and a new impulse is going to start. Wouldn't you be able to win trades? Absolutely. You will be able to win trades like a trading god. The thing is, correction and retracement are the same things. And the Fibonacci retracement is used to find out when a correction or retracement is going to end and when an impulse would begin. So a Fibonacci retracement has certain levels to it, and traders believe that when the price reaches those particular levels, the price will reverse or the retracement will end and a new impulse will start. So this is how a Fibonacci retracement tool looks. It has different levels to it like 0.236, 0.382, 0.5, 0.618, etc. But out of all these levels, 0.382, 0.5 and 0.618 are the most used levels, and most of the time price corrects to these levels and then gives an impulse. I feel that these three levels are the most reliable, so I only keep these three levels on my Fibonacci as it is more helpful this way. And out of these three levels, 0.618 is my favorite. It is also called as golden ratio and I mostly try to find trades on this level. I hope you are with me and are able to understand this thing clearly. If you are, then a like and a sub would be amazing. Now there is one big problem with Fibonacci. To get good results, you need to draw it right. And there have always been a lot of questions on what is the right way to draw it. There are two important things that you need to keep in mind while drawing a Fibonacci retracement. Number one is you have to connect swing highs to swing low or swing low to swing high. And number two is you have to distinguish between impulse and correction and then find out when a correction is started and then adjust the Fibonacci accordingly. So let us try to understand this on a chart. Let us assume this was a downtrend. Okay, so while drawing a Fibonacci retracement, you will have to connect or start drawing from the swing high that is the first lower high, to a new lower low, which would be somewhere near here. So this is how you will draw a Fibonacci retracement in a downtrending market. And you can see that after this, when the price corrected till 0.618 level and then it dropped sharply. Then again, if you have to draw a Fibonacci retracement, then you will have to connect the new high to the new low, which would be something like this. So again, the price came till 0.618 level and then it is reacting to it. Now, to draw a Fibonacci retracement in an uptrending market, what you have to do is you have to connect a lower low to a higher high. In this case, let us say this was the previous higher high and then a lower low and then a new higher high. So what we will do is we will select the tool and then we will start drawing from the lower low, which will be this, that is the swing low, and we will connect it to the swing high, which will be this. Now you can see after this the price corrected till 0.5 level and then it started to move up and went above this level. Again, if you wish to draw it, then after the price has moved above this high and created a new high, what you will do is you will again draw it from this low, that is the new high low, to a new higher high, which would be something like this. And then again the price is reacting to 0.618 level and it started to move up. So this is how you use swing highs and swing lows to draw Fibonacci retracement. The next thing you have to look after is after you have drawn a Fibonacci retracement. Like let us take this example. Let us say you connected the swing low to the swing high in an uptrending market. So after you have done this, you will have to distinguish between the impulse and the correction. You have to make sure that after an high, when the price drops down, it should look like an correction. That is, in this case, after the price dropped down, this part over here is clearly looking like a correction. And then if you compare this whole area, this whole is a bigger correction. So after an impulse, we got a big correction and then the price started to move up. So you have to always make sure that after you have drawn a Fibonacci, you do not have to enter a trade until and unless you are clear that the price is correcting or the price is retracing, because the use of Fibonacci retracement is to find out when the retracement is going to end. So you have to make sure that when you have drawn it, you have to wait for the price to properly retrace. Like it should give you signs of corrections. You should be able to understand that price is correcting, and only then you can use these three levels to trade using a Fibonacci retracement.